Now we will starting with the baggage, postal articles and stores. So here we can see one practical question can be asked in the examination relating to computation of duty liability in respect of baggage. So basically this provisions relating to this baggage, postal articles and stores, they are from section 77 say to section 90. We'll be discussing the provisions relating to say baggage, postal articles and stores. So what basically baggage is? We have seen in the first definitions also that baggage basically includes what? Unaccompanied baggage. Baggage say includes say unaccompanied baggage but does not include say motor vehicle. Baggage includes unaccompanied baggage but does not include say motor vehicle. So fundamentally what baggage is? Baggage is the luggage of the passenger. Baggage is what? The luggage of the passenger. Now here, let us see. It is baggage, postal articles and stores. We are discussing the same. So what baggage is? Baggage, it includes say unaccompanied baggage but does not include say motor vehicle. Now section 77 provides for what? Section 77 provides that the owner of the baggage has to declare the contents of the baggage. The contents of the baggage. For the purpose of clearing the baggage, the owner of the baggage has to declare the contents of the baggage. And what is the rate of duty and tariff valuation? As you are aware, the rate of duty on baggage is 35%. Rate of duty on baggage is 35%. Conceptual rate of duty is there. And 10% is the social welfare surcharge. No IGST is levied on baggage. No IGST on baggage. So the effective rate of duty on baggage is 38.5%. But in case of those articles where we do not get the concession, the rate of duty on baggage is 100%. Rate of duty is 100% and 10% is a surcharge. Therefore, social welfare surcharge. So the effective rate of duty works out to be 110%. The effective rate of duty, the same works out to be 110%. Now what is the date for determination of rate of duty and tariff valuation in case of baggage? The date for determination of rate of duty and tariff valuation in case of baggage is what? The date on which the baggage declaration is made to the proper officer. When the baggage declaration is made to the proper officer, on that whatever rate is prevalent on that date, that will be applicable. And in case if declaration is given prior to arrival of baggage, if declaration is given prior to arrival of the baggage, in that case, if declaration is given prior to arrival of the baggage, in that case, what will be the rate of duty and tariff valuation? It will be deemed to be presented on the date of arrival. It will be deemed to be presented on the date of arrival. On the date of arrival. It will be deemed to be presented on the date of arrival. Now, certain baggage has been made exempt from duty. Certain baggage has been made exempt from duty, that is general duty free baggage allowance that has been given in baggage rules 2016. That has been given in say baggage rules 2016. So basically rule 3 and rule 4, they are basically general free allowance. So in rule 3, in case of an Indian resident, or say a foreigner is residing in India, they are coming from a place outside India, or tourist of Indian origin is coming from place outside India other than infants. Infants are small child up to 2 years of age. They are returning from the countries other than Nepal, Bhutan or Myanmar, that is Burma. Then what is the duty free allowance? Used personal effects and travel souvenirs. Used personal effects and travel souvenirs, and articles up to the value of 50,000. Articles up to value of rupees 50,000, excluding the articles which have been mentioned in Annex 1. So you have to remember the articles which have been say mentioned in Annex 1, if they are carried on the person or say accompanied baggage of the passenger. So basically the articles which have been mentioned in Annex 1, you cannot say bring those articles. You cannot say bring those articles. So fundamentally, what are the articles which are mentioned in Annex 1? It is firearms, cartridges of firearms. It is firearm, cartridges of firearm exceeding 50. Up to 50 cartridges, the same can be accommodated in general free allowance. Cigarettes exceeding 100 sticks. Up to 100 sticks can be accommodated in GFA. Or cigars exceeding 25. Or tobacco exceeding 125 grams. Then alcoholic liquor or wines. Alcoholic liquor or wine in excess of 2 liters. Alcoholic liquor or wine in excess of 2 liters. Gold or silver in any form other than ornaments. Gold or silver in any form other than ornaments. And flat panel, LCD, LED or plasma. Flat panel, LCD, LED or plasma, that cannot be imported. Otherwise, juice, personal effects and travel souvenirs can be imported, and articles other than those which have been mentioned in Annex 1 up to 50,000 rupees can be say imported. Here jewelry is also covered. Then tourists of foreign origin, including the excluding the infants, they are coming from any country other than Nepal, Bhutan or Myanmar, they will be allowed to bring used personal and household articles and travel souvenirs, use personal effects and travel souvenirs, and articles up to 15,000 in value. Rather than 50, it is 15,000 in value. Besides this, if it's an Indian resident or a foreigner who is residing in India or a tourist of Indian origin or foreign origin, they are coming from Nepal, Bhutan or Myanmar, they will be allowed to use personal effects and travel souvenirs. Besides this, articles up to 15,000 in value, excluding the articles mentioned in Annex 1. If carried on in person or in accompanied baggage of the passenger. But in case if they are arriving by land, in case if they are arriving by land, then only used personal effects is allowed. If they are arriving by land, only used personal effect is say allowed. Then we come to what? Rule 5. Rule 5 is a free allowance in case of jewelry. Passenger who has been residing abroad for more than 1 year. Passenger who has been residing abroad for more than 1 year, he can bring jewelry up to weight 20 grams weight cap is there, value cap of 50,000 is there in case he is a gentleman passenger. If he is a gentleman passenger, he can bring jewelry up to say 20 grams, value cap is 50,000. Lady passenger, weight cap is 40 grams and value cap is say 1 lakh. That can be brought duty free. Passenger who has been residing abroad for a period of say more than a year. Then in case if a person is transferring his residence, in case of a person is transferring his residence to India, here if duration of stay abroad is say for more than 3 months but up to 6 months. Duration of stay abroad is say for more than 3 months but up to say 6 months. Then they can bring personal and household articles. They can bring say personal and household articles other than those mentioned in Annex 1, other than those which have been mentioned in Annex 1 or say Annex 2, up to a value of rupees 60,000. So 6 months, remember 60,000. Then if they are abroad for more than 6 months but up to 1 year, they can bring used personal and household articles up to say rupees 1 lakh. Those which have been mentioned in Annex 3. And then if they are minimum stays say 1 year abroad during the preceding period of say 2 years and they have not availed this concession in preceding 3 years, they can bring articles, that is used personal and household articles use personal and household articles, other than those which have been mentioned in, say, Annex or 1 and 2, up to an aggregate value of, say, rupees 2 lakhs. Minimum stay 1 year abroad. Then here, next is about what? The minimum stay of 1 year out of 2 years. Minimum stay 2 years abroad is there. Then they can bring personal and household articles other than those mentioned in Annex 1 and 2, but up to a value of rupees 5 lakhs. Up to, say, value of rupees 5 lakhs. Here, minimum stay of 2 years abroad, shortfall up to 2 months can be condoned by AC or DC. Shortfall in stay of minimum 2 months, 2 years basically, for 2 months can be condoned by AC or DC. And short visits can be made, say, for a period of 6 months. Short visits can be made for a period of, say, 6 months. And the passenger has not availed the concession in, say, preceding 3 years. Passenger has not availed the concession in preceding, say, 3 years. This is all about the duty-free allowances. Now, in respect of, say, unaccompanied baggage, we get the benefit of the general free allowance, unaccompanied baggage, provided the baggage lands in India up to 2 months before the arrival or, say, within a year. And for crew members, they can bring items like chocolates, cheese, etc. up to a value of rupees 1500. Now, section 83, postal articles. The rate of duty and tariff valuation in respect of goods which have been imported or exported by post. In case of export by post, what will be the rate of duty and tariff valuation? The rate of duty will be applicable of the date on which the exporter delivers the goods. Exporter delivers the goods to the postal authorities or authorized courier for exportation. The exporter delivers the goods to the postal authorities or, say, authorized export courier for exportation. In case of import, the rate of duty will be applicable when the postal authorities, they give the list to whom? To the custom authorities. Postal authorities give the list to custom authorities. And in case if the list has been presented prior to the arrival of the vessel, in case the list has been presented prior to the arrival of the vessel, then it will be deemed to be presented on the date of the arrival of the vessel. It will be deemed to be presented on the date of the arrival of the vessel. One section 80 was also there, that is temporary detention of baggage. So you are coming from out of India, your baggage contains some dutiable goods or prohibited goods, and you do not want to pay the duty on the same. So the custom authorities, they can temporarily detain the baggage, and whenever you are leaving India, the baggage will be returned to you, or you can say, this my friend is going out of India, that baggage can be returned to them, or it can be, a cargo consigned in your name. Then we come to the stores. What do we mean by stores? Stores basically means goods which are for use in vessel or aircraft. Stores basically they are goods which are for use in vessel or aircraft, and it includes what? Fuel and spare parts, and includes, say, fuel and spare parts and other articles of equipment, whether or not for, say, immediate fitting. So stores basically means what? Goods for use in vessel or aircraft, or, say, other articles of equipment, whether or not for, say, immediate fitting. That is, say, stores. Now here, the provisions relating to stores states what? In case, say, goods are imported and they are to be supplied as stores to foreign going vessel or aircraft. To foreign going vessel or aircraft. That vessel or aircraft is proceeding to any place outside India. That is basically foreign going vessel or aircraft, whether it is touching any port or intermediate port in India or not. So here, these goods can be stored in warehouse. These goods can be stored in warehouse without payment of import duty. That is, without assessment, the goods can be kept in warehouse. Besides this, here the duty will be levied on stores only when the voyage of vessel, the voyage basically of vessel or say aircraft, terminate in India. If the voyage terminates in India, then only duty will be levied. If it's a foreign going vessel or aircraft, then transit and transshipment is allowed without payment of duty. Similarly, imported stores may be consumed. Imported stores may be consumed on board of foreign going vessel or aircraft. Imported stores may be consumed on board of foreign going vessel or aircraft without payment of import duty. They can be consumed on board of foreign going vessel or aircraft without payment of import duty. And if any goods are supplied to foreign going vessel or aircraft, it will be regarded as export. It will be regarded as export, and such export will be free from export duty. It will be free from export duty, and here whatever duty has been paid, whatever import duty is paid, same will be admissible as drawback, because when we import and subsequently they are supplied as foreign, say they are supplied as stores to a foreign going vessel or aircraft, depending upon the voyage, length of the voyage that is allowed, and we are allowed duty drawback on the same. And in case of aviation fuel, and in case of say aviation fuel and lubricating oil, in case of aviation fuel and lubricating oil which is taken on board of any foreign going aircraft, instead of 98%, 100% duty drawback will be say admissible. Instead of 98%, 100% duty drawback will be admissible. These provisions will be also applicable in respect of imported stores for Navy vessels. Navy vessels also, section 90 provides for the same. The provisions which we have discussed here will be applicable. So this was all about say baggage, postal articles and stores. You have to remember the baggage rules. They are very, very important from examination point of view. Now this is the last chapter which we'll be discussing in customs, that is exemption and refunds. So first of all, we'll be discussing about the exemption, that is section 25. Section 25, it is dealing with the power of the central government to grant exemption from custom duty. Then we will be discussing about section 26, that is refund of the export duty, that will also be discussed by us. Then refund of duty in certain circumstances, import duty in certain circumstances, that is basically 26A, refund of duty in certain cases. 26A, refund of duty, import duty in certain cases. And then we will be discussing section 27, that is the main section, refund of duty. And then we will be discussing about section 27A, that is dealing with interest on delayed refunds. Let us now start. Section 25, basically it empowers the central government to grant exemption from duty of customs. Here, exemption from duty of customs is granted. Basically, it can be general exemption, section 25, basically section 25(1), it is general exemption. Now here, this general exemption can be a conditional exemption. It can be what? A conditional exemption. Or it can be an unconditional exemption. This can be a conditional exemption, or it can be, say, an unconditional exemption. Conditions, we are required to fulfill the conditions, that then only will be getting the benefit of the exemption from duty, or it can be an unconditional exemption. We can say it is an absolute exemption. This is absolute exemption. That can be, say, from whole of the custom duty, or it can be, say, from part of custom duty. It can be from whole of custom duty, or it can be from part of custom duty. So the government, through notification in the official gazette, can exempt the goods wholly or partly from custom duty for conditions which are to be fulfilled either before, or after, say, clearance of the goods. Then there is an ad hoc exemption. Ad hoc exemption, basically it is a special order is granted and the goods can be made exempt. Goods can be made exempt, say from whole or part of the custom duty. The goods can be made exempt from whole or part of custom duty by special order in each case. By special order in each case. Now, important aspect to remember here is when, say, a conditional exemption notification has been issued. Say here, the conditional exemption notification is issued. So, validity of the conditional exemption notification, it will be what? The same will remain valid for a period of 2 years from the end of the financial year. That conditional exemption notification, the same will be valid for, say, a period of 2 years from the end of the financial year. Beside this, in case if there is any doubt, relating to the applicability, there is any doubt relating to applicability of any exemption notification. So here the central government can provide an explanation by way of explanation. This explanation is issued within 1 year from the issue of the notification or order. It is 1 year from the issue of notification or order, and the same will form the part of the, say, earlier notification or order. The same will form the part of, say, earlier notification or order. The central government, say, can clarify the scope or applicability of the exemption notification. Now here, the exemption may be granted. The exemption may be granted from a form or method. Exemption may be granted from a form or method different from the form or method in which the statutory duty is leviable. So what is statutory duty? Statutory duty is duty before exemption. So here exemption can be granted from a form or method before, say, different from the form or method, say here, in which the statutory duty is leviable, and then they say that, however, the duty after exemption cannot exceed the statutory duty. Duty after exemption cannot exceed the statutory duty. Then what is the effective date of exemption notification? Here the effective date of exemption notification is when it is, say, same is published in the official gazette. When the same is, say, published in the official gazette. And exemption can be from say collection of custom duty, when the same duty will not be collected, when the duty amount does not exceed rupees 100, when duty amount does not exceed rupees 100, then the duty will not be, say, collected. Then we are having section 27. Section 27, it is dealing with what? Refund of duty. So here, application is to be made for refund of duty, application is to be made in prescribed form for refund of duty to the AC or DC. And this application is to be made within 1 year from date of payment of duty. That is before the expiry of 1 year, before the expiry of 1 year from the date of payment of duty or interest on such duty. So here the application is to be made before the expiry of 1 year from the date of payment of duty, such duty and interest. And in case the time limit of 1 year will not be applicable, time limit of 1 year will not be applicable in case the duty is paid under protest. The time limit of 1 year, the same will not be applicable in case, say, the duty is paid under protest. In that particular circumstance, the time limit of 1 year will not be applicable. Then, how you will be computing the time limit of 1 year in case the goods have been made exempt from payment of duty by special order? In case the goods have been exempt from payment of duty by special order, then it will be what? The date of issue of order. Then it will be what? The date of issue of order. In case where the duty becomes refundable, in case the duty becomes refundable as a consequence of, say judgment, decree or order of direction of the appellate authority, sestet or court, it is the date of such judgment, decree, order or direction of the such authority. In case of provisional assessment, it will be the date of adjustment of duty at the time of final assessment thereof. It is the date of adjustment of duty at the time of final assessment or reassessment. And in case of any other case, it is the date of payment of duty. Remember, this is a time limitation. Then here, as you are aware, the refund is credited to Consumer Welfare Fund. Refund is credited to Consumer Welfare Fund. However, in these circumstances, refund will be granted to the applicant. Instead of being credited to the Consumer Welfare Fund, the refund will be, say, granted to the applicant. So here, when the refund will be granted to the applicant, it is refund to the importer-exporter. Refund to the importer-exporter in case he has not passed on the incidence of duty to any other person. Refund to the importer-exporter in case he has not passed on the incidence of duty to, say, any other person. Then in case of the imports made by an individual for his personal use, if the imports have been made by individual for his personal use, refund to buyer if duty has not been passed on to the, if buyer has not passed on the burden to any other person. Then in duty drawback, refund of export duty, refund to notified class of applicants, and excess duty which has been paid by the importer, and the same is evidenced from the bill of entry in case of self-assessed bill of entry or, say, reassessed bill of entry. In these cases, the refund will be granted to the applicant instead of being deposited to Consumer Welfare Fund. And here also, no refund will be admissible if the amount is less than rupees 100. No refund will be admissible if the amount is less than rupees 100, and we have to furnish documentary evidence. The documentary evidence is to be furnished to prove that the incidence of the duty, documentary evidence is to be furnished to prove that the incidence of duty has not been passed on to, say, any other person. So this is about what, section 27. Then section 26 is refund of export duty. Section 26 is refund of export duty. Basically the goods, when the export duty, the goods have been exported, on payment of export duty, and then the goods are, say, re-imported. Goods are re-imported within 1 year. Goods are, say, re-imported within 1 year. The goods are returned otherwise than by way of resale. Goods are, say, returned otherwise than by way of resale. Goods are returned otherwise than by way of resale. Within, say, 1 year they have been re-imported. Otherwise than by way of resale, I have not sold them. Basically, I have exported them and they have again not sold, give the goods to me. I have sold the goods, exported the same, then they have returned the same, then refund claim is to be made. Refund claim is to be made within 6 months from the date when the proper officer makes an order permitting clearance of goods for importation. Refund claim is to be made within, say, 6 months from the date when the proper officer makes an order, say, permitting clearance of the goods for importation. Then in case if the refund is not granted, within a period of 3 months from the date of application of refund, if the refund is not granted within a period of 3 months from the date of application of the refund, then in that particular circumstance, interest will be granted on refund at rate of 6% per annum. Interest will be granted on refund at rate of, say, 6% per annum after the expiry of 3 months till the date of grant of refund. Interest will be granted at rate of 6% per annum after the expiry of, say, 3 months till the date of grant of such refund. Then section 26A is a refund of import duty in certain circumstances. So fundamentally, here the goods they are imported. Import duty is paid, and subsequently it is found that the goods are defective and it's not as per the specifications. If the goods are, say, defective and not as per the specifications, and the goods are, say, identified as imported goods, and here no drawback has been claimed in respect of the same. So the duty has been paid at the time of clearance of the goods for home consumption. The goods are found to be defective and they are not in conformity with the specifications. The goods have not been worked. The goods have not been worked or repaired or used. The goods have not been worked, repaired or used, say, after importation, except just to find out that this is the defect, just to find out the defect. The importer does not claim the drawback, and the importer either export the goods, or he relinquish the title of the goods, or he destroys them and render them, say, commercially valueless. Then refund will be granted of the import duty. Importer exports the same and he relinquishes the title, or say he destroys the goods. Then refund will be granted only in respect when no offense appears to have been committed in respect of such goods. We have to make the application for refund within, say, 6 months from the relevant date. Now, what is basically, the timeline for this, this export or relinquishment or, say, destruction? The same is to be made within 30 days. It is to be made within 30 days. From the order for clearance of goods, say, for home consumption, and extension can be there for a further period of 3 months. Extension can be there for 3 months. What you have to do is you have to export, or whether you have to relinquish the title, or we have, say, destroy the same. So what is the relevant date here? Within 6 months, we have to make an application. In case the goods are exported out of India, the relevant date will be the date when the proper officer makes an order permitting clearance and loading of goods for exportation. In case of relinquishment of title, it is the date of relinquishment, and in case of destruction, it is the date when the goods have been, say, destroyed or rendered commercially valueless. But in case, if no refund will be granted in case of perishable goods, if they have exceeded their shelf life, in that case, refund will not be, say, granted. Or, say, when the offense appears to have been committed in respect of goods, refund will not be granted. No refund when offense appears to have been, say, committed in respect of such goods. So this is all about what we have discussed about the, the exemptions and refund. So this we are discussion relating to our exemption and refunds. Now we'll be starting with the foreign trade policy. So as you are aware, with the fact that the customs and foreign trade policy in aggregate is of 25 marks. So not more than one question will be asked from this particular chapter in the examination, and the same can be say multiple choice questions also. Now basically what foreign trade policy is, foreign trade policy is a set of guidelines which is issued by the government in matters relating to foreign trade. What is foreign trade? That is import and export of goods. So here we will be discussing the various export promotion schemes. So fundamentally what is important here is the export promotion schemes are important. Export promotion schemes, they are important here. What are the various export promotion schemes? Say we are having one is in customs, we have already discussed about the duty drawback scheme. In customs we have discussed about the duty drawback scheme. We are entitled to the drawback of the duties which have been paid by us on the goods which have been imported, which are used in manufacture, processing or carrying out any other operations. And if we export the goods, we get a refund of the duty, import duty in form of duty drawback. Then we are having one remission of duties and taxes on exported product scheme, where we are given duty credit scripts. Because we have already exported, we will be entitled to get the duty credit script in form of RODTEP. Earlier we were having MEIS and SEIS, now we are having RODTEP scheme. Then the duty credit scripts are given, and we will be able to utilize these duty credit scripts for payment of custom duty on subsequent importation. Then we are having duty free import authorization and advance authorization schemes. Here we are allowed to import the goods, say without payment of the custom duties, in duty free import authorization and advance authorization schemes, subject to fulfillment of the export obligations. Similarly, for capital goods, we are having export promotion capital goods scheme, that is EPCG schemes. Besides this, we are having some schemes for status holders, and there is a concept of deemed export similar to what we have discussed in GST. Under section 147 we are having say deemed exports here also. So fundamentally what foreign trade policy is, foreign trade policy is a set of guidelines or the instructions which are issued by whom? The government of India, central government basically, in relation to the matters relating to import and export of goods, that is foreign trade. And there is one separate regulation, that is Foreign Trade and Development Regulation Act 1992. And this Foreign Trade and Development Regulation Act 1992 is governing the provisions relating to foreign trade. And here, as you are aware, that in this foreign trade policy, we are having, say, for every 5 years this policy is laid down. Now at present the policy has been laid down, which is running is 15-20 only, but the same is in regular course extended until and unless a new policy is laid down. So what are the what is the contents of the foreign trade policy? We are having, say, this is 9 chapters are there. Chapter 1 of the foreign trade policy is dealing with the legal framework and trade facilitation. Then general provisions are there relating to, say, import and export of goods and services. Besides this, we are having export promotion schemes, that is a remission of duties and taxes on exported product scheme and status holder schemes. Besides, we are having duty exemption and duty remission schemes in form of advance authorization schemes or duty free import authorization, that is AA or DFIA, and duty drawback is there. One chapter is relating to export promotion capital goods scheme. One chapter is relating to, especially relating to EOUs, that is export oriented undertakings, units of electronic hardware technology park, software technology park and biotechnology park. for them, what are the promotional schemes have been made, that is covering in this is in that chapter. Then chapter 6 is relating to deemed exports. Then chapter 7 is relating to deemed exports, and chapter 8 is relating to quality complaints and trade disputes, and chapter 9 is relating to the definitions. Beside this, we are having the handbook of procedures is provided in say HBP 1 volume 1 and HBP volume 2, and we are having ITC HS classification. And in ITC HS classification, we are having say schedule 1 and schedule 2. Schedule 1 is dealing with the import goods which are subjected to import duties or say imports. Therefore, it is known as import policy. And schedule 2 is dealing with the export policies, and some provisions have been, say, forms have been notified, that is the Ayat Niryat forms, and some standard input output ratios have been given. So basically, these are the what contents of the foreign trade policy. Here in HBP 1, we are having say appendices and Ayat and Niryat forms. HBP 2 is dealing with what? Standard input output norms and ITC HS classification here, and special chemicals, say organisms, these metals and the materials, equipment and technology items are there. That is COMET items. Special chemicals, organisms, materials, equipment and technology items are there. Now here the Director General of Foreign Trade. Director General of Foreign Trade is the highest administrative authority, and DGFT is administrating here, highest administrative authority. Now let us see further administration aspects. As I have already telling you, there is the Director General of Foreign Trade. It is an attached office of the Ministry of Commerce and Industry, and here DGST is the highest administrative authority, and decision of the DGFT is final. Other authorities involved are Central Board of Indirect Taxes and Customs, RBIs and state GST departments. Now what are the general provisions relating to import and export of goods? So here import and exports are free basically until and unless they are regulated, and in case if import and export of any goods is say prohibited, then we are required to say authorization is required for if you want to import and export those goods. Then the exporter or importer will have to comply with the these laws, and in case of interpretation of policy, as I already told you, the decision of the DGFT will be final. It is the Director General of Foreign Trade will interpret, and the decision of the DGFT will be final. And certain exemptions have been provided from policy and procedure, and exemption committee is there, which will be providing what? The exemptions from policy and other procedural aspects. Then there are principles of restrictions. So in case if any item is say restricted, they can impose, say government can impose restrictions on import and export of goods. Government, they can impose what? The restrictions on import and export of goods, and if any restrictions have been placed, then you need an authorization for import and export. The fundamentally, Director General of Foreign Trade, through notification, they can impose say prohibitions or say restrictions on export of foodstuffs or say other essential products for preventing say critical shortages, or say on import and export of necessary for application of standards or regulations for classification, grading or say marketing of commodities, to promote establishment of a particular industry, protection of public morals or say maintain public order, protection of human, animal or plant life or health. So there are various reasons for which restrictions can be placed, and in case if you want to import and export the items which have been put in a restricted list, you need an authorization. Then these restrictions are placed here. Then authorization is given for the same. Authorization basically is a license which is given for import and export, and the authorization is not a right. Remember, authorization is not a right. That is what it is up to the department whether to give you a license or not. So fundamentally, authorizations are issued. Beside this, in case if you do not comply with the provisions, then penalty can be levied, and the entity can be placed in a denied entity list. Certain items can be, say, procured only through state trading enterprises. Say Minerals and Metal Trading Corporation. They are, say, state trading enterprises. So through certain items can be procured only through state trading enterprises. And in case if you want to directly import the goods, which our state trading enterprises can import, then in that particular circumstance you would need a license. Now here, under this import-export policy, import-export code is given to every importer and exporter. And now those importers or exporters which have been registered under GST law, their GSTIN will itself serve as what? Import-export code. Otherwise, we will have to make an application in electronically to the Director General of Foreign Trade for obtaining the IEC code. And in the regular course, updation is required for this IEC. That is, the IEC holder shall ensure that the details in its IEC is updated electronically every year up to June, that is April to June period. And in case where there are no changes in IEC details, same also we need to be confirmed, basically online. And if you do not update the same, then your IEC will become, say, inactive. Now, what are the mandatory documents relating to, say, import and export of goods? There are just only 3 mandatory documents. One is the bill of lading. One is shipping bill or bill of export in case of export. And in case of import, it is bill of entry. And here it is export invoice. Here it is, say, import invoice. So these are the 3 mandatory documents which are required. Commercial invoice come packing list. Now, relating to the terms and conditions of the authorization, as I already told you, authorization basically is granted relating to, say, import of goods for which their items are restricted. In the terms and conditions of the authorization are what? Here, the description and quality and value of goods is mentioned basically. Actual user condition is there. How much export obligation is required to be fulfilled? What is the minimum value addition which is to be achieved? What is the minimum value addition to be achieved? Minimum export and import price, and bank guarantee, say, legal undertaking, bond with the customs or authority or the regional authority. These are the various terms and conditions relating to the authorization. So for import and export of goods, we need an authorization, but remember that authorization is not a right here. Now next is import policy for second-hand goods. Now this is also important. The same can be asked in your examination. So here, second-hand capital goods. So in case if you want to import second-hand capital goods being, say, personal computers, laptops, including their refurbished or reconditioned spares, photocopier machine, digital multi-function print and copying machine, air conditioners, diesel generator sets. Now here, the restrictions have been placed on the same. Import policy basically is restricted, and conditions is what? Importable, the same can be importable, say, against an authorization. So if you want to import these second-hand goods, there are restrictions have been placed, and the import can be only against the authorizations. Then again, say, other than, say, second-hand goods, say, other than the capital goods, they are items, they are also, say, restricted. And refurbished, reconditioned, spares of capital goods, refurbished, reconditioned spares of capital goods. The import is free, subject to the production of chartered engineer certificate to the effect that such spares have at least 80% of the residual life. The spares must have at least say 80% of the residual life of the original spares. And all other second-hand goods, they are also free. Relating to say import of gifts and samples, so here all the items can be imported in form of say gifts and except for say except the items have been say which have been say prohibited. So import of goods including those purchased from e-commerce portals through post or courier where custom clearance is sought as gifts is prohibited except for say life-saving drugs, and say medicines, oxygen concentrators, earlier added, and rakhis, but not gifts related to rakhis. So they are prohibited except for the same. And for export of goods including say edible items, export of gifts basically, goods including say edible items of value not exceeding rupees 5 lakhs in a licensing year. Okay, the same may be exported as gifts. The same may be say exported as gifts. Then we are having, this is a very, very important scheme, that is remission of duties and taxes on export product scheme, that is RODTEP, because of discontinuance of MEIS scheme is there and SEIS scheme is there. Whether the discontinuance of say MEIS scheme and SEIS scheme, so we are having newly introduced scheme that is remission of duties and taxes on exported product scheme. So basically what is the objective of scheme? Objective of the scheme is to refund currently unrefunded what? The duties, taxes, levies. They may be at the central state, central level, or say state level, or local level, which has been borne on the exported products. The same has been say borne on the exported product, including prior stage cumulative indirect taxes on goods and services used in say production of the exported product. So whichever not refunded, they will now be refunded. Besides this, such indirect taxes, levies, or say duties in respect of distribution of the exported product. So fundamentally, the salient features of the scheme is what? It seeks to refund to the exporters the embedded central, state, and local duties and taxes that were so far not being say rebated or refunded. Okay. Now here, basically, duty credit is issued. In lieu of what? The remission of any duty or tax or levy, which is what chargeable on any materials used in manufacture, processing, or say carrying out any other operations of the goods which are exported. Here duty credit is issued in lieu of say remission of any duty, tax, levy chargeable on any material used in manufacture, processing of the goods, or for carrying out any operations on such goods in India that are exported, except where such duty, tax is not exempted, remitted, or credited under any other scheme. Besides this, duty credit is issued against exports. Duty credit basically is issued against exports of notified products, notified goods under foreign trade policy. And what is the value of this is very, very important. What is the value of the goods for calculating the duty credit scrip? So fundamentally it is what? FOB value of exports or 1.5 times or 1.5 times of market price of the said goods, whichever is less. Say, you have to remember this is very important. Say in question, we are given 2%, say, duty credit scrip. Duty credit rate is 2%. And here FOB value of export is say 10 lakh rupees. Market price of export product is say 8 lakh rupees. 1.5 times works out to be 12 lakhs, which is less. It is 10 lakhs here. So it is 2% of say 10 lakhs. Okay. So value of the said goods is for calculation of duty credit is to be allowed. Basically it is 1.5 times of the market price of the 1.5 times the market price of the export product or the FOB value, which are say less. And here whatever duty credit scrip is issued, the same will be credited in the electronic credit ledger, which is maintained under section 51B of the customs. So refund in form of duty credits would be credited where? In the electronic credit ledger. The same will be credited in the electronic credit ledger in the customs automated account, which has been maintained in the customs automated account, maintained account of the exporter. And such credit scrip, basically the duty credit scrip, the same will be used only for payment of the basic custom duty. Such duty credit scrip, the same will be used only for the payment of say basic custom duty, okay, and the same is transferable. Duty credit scrip is freely transferable. This duty credit scrip is freely transferable. It can be transferred to the other importers. It can be say transferred to the other importers. And the rebate under the scheme shall not be available. The rebate under the scheme, as we already told you, the same will not be available in respect of duties and taxes. In respect of duties and taxes, which have say already been exempted or remitted or say credited, which has already been say exempted, remitted or credited. Now, all the exporters are of eligible RODTEP export items, they will be eligible under the scheme. All the exporters will be eligible under the scheme, basically those of the export items which have been notified there. And rebate would be granted to eligible exporter. Rebate would be granted to say eligible exporter at notified rate at percentage of the FOB value per unit of the goods exported. So, however, for export items, fixed quantum of rebate can also be notified. It is granted on the basis of say percentage value of say FOB item. And rebate would not be basically dependent on the realization of export proceeds. Rebate would not be dependent upon the realization of export proceeds at the time of issue of rebate. At the time of issue of rebate. However, the rebate will be deemed never to have been allowed. Rebate would be deemed never to have been allowed in case if you do not receive the amount in convertible foreign exchange. Rebate would never be deemed to have been allowed in case you do not receive the amount in convertible foreign exchange within the time limit under say FEMA. Then this is very important, you must remember that they may give certain category of items which are say ineligible under the scheme, and they will then ask to calculate the duty credit under RODTEP. So what are the ineligible supplies or items or categories under RODTEP scheme? That is export of imported goods. Export of imported goods in the same or substantially the same form will not be eligible. Then exports through transshipments, it will not be eligible. Export products which are subjected to export duty, products which are restricted or prohibited under FTP, supplies of product to supplies of products which have been manufactured by DTA to units, DTA units to say SEZ or say free trade warehousing zones, products manufactured in electronic hardware technology park, biotechnology park, goods which have been taken into use, say, after manufacture, export products with for which electronic documentation in ICE gate EDI has not been generated, or say export from say non-EDI ports. Besides this, products manufactured or exported availing the benefit of the notification number 32/1997 customs deemed exports are not eligible. Products manufactured partly or wholly in warehouse because duty is not paid in that case. Then export of for which claim for duty credit is not filed in shipping bill or bill of export in say customs automated system. Besides this, export of products say products which have been manufactured or exported in discharge of export obligation against advance authorization, duty free import authorization, special advance authorization issued under duty exemption schemes, products manufactured or say exported by a unit licensed as say 100% EOU or say in terms of the FTP, or by say any units situated in free trade zone, export processing zone, special economic zone. And inclusion of the exports under these categories basically will be decided on later. So fundamentally, this is what these are what the ineligible ones. Then we come toward the status holders. Here, who are granted the category, the status holders are say those exporters who are of repute, and they will be given certain sort of privileges. Basically, what you have to see is export performance is to be seen. What is the export performance? Export performance is necessary in 2 out of 4 years. Export performance is necessary in 2 out of 4 years. So status category, it can be 1-star export house, 2-star export house, 3-star export house, 4-star export house, and say 5-star export house. This is a status category. And how much is the export performance? It is the FOB value of the exports or FOR value which has been converted basically in dollars, and here how much the export performance must be there. For say 1-star export house, for 1-star export house, the export performance must be what? US dollar 3 million. And this FOR is converted into say dollars on the basis of what? On the basis of rates applicable on 1st April of each financial year, as notified by CBIC. And say what? Micro and small micro enterprises, SMEs. Then we are having manufacturing units having ISO or BIS, or say units which have been located where in northeastern states and agri zones, they will be given double weightage. Double weightage will be given for according 1-star, say 1-star export house status. They will be given double weightage. Say for example, if they have exported US dollar 20 lakhs in past 2 years out of 4 years, double weightage will be given to them. So it will be regarded as US dollar, say 60 lakhs means 6 million US dollars. So they will be given a double weightage only for the purpose of 1-star export house if they are micro, small and medium enterprises, or they are manufacturing units having ISO or BIS, units located in northeastern states and units located where in agri export zones. Then 1-star export house, what is the export performance? 3 million US dollars. 2-star it is 25 million US dollars. 3-star it is 100 million US dollars. 4-star it is 500 million US dollars. So it is 25, then 100, 500 and 2000. 5-star it is 2000 US million dollars. Now what privileges are granted to status holders? So basically what privileges are granted to status holders? Here authorization and customs clearance. Authorization and customs clearance for both import and exports. Authorization and customs clearance for both import and export can be basically will be granted on say self-declaration basis. Okay. Then the input-output norms will be fixed on priority basis. That is within 60 days of the norms committee by the norms committee. Exemption from furnishing of BG. Exemption from say compulsory negotiation of documents. 2-star and above export houses, they will be allowed to say be permitted to establish their own export warehouse. Then 3-star and above export houses will be given accredited clients program ACP and self-certification facilities, and status holders will be allowed to freely export what the items on. Basically they can export their items on for their export promotion, that is 2% of the average annual export realization during say preceding 3 licensing years. 2% of the average annual export realization during say preceding 3 licensing years. So these are the benefits which are granted to say status holders. So practical question can also be asked from this. Then we are having the duty exemption and remission schemes. Basically we are having duty exemption scheme in form of advance authorization scheme or say duty free import authorization scheme. We are having duty remission scheme in form of duty drawback, and we already discussed about RODTEP. Now basically what advance authorization scheme is. Advance authorization scheme is a facility which will allow, it is basically a facility to allow import of inputs within 12 months of the issue of the authorization, which are used or required to be used in the manufacture of export product. The export must be fulfilled say within 18 months of the issue of authorization. In case of project exports, basically it must be up to the duration of the project. For defense item it is 24 months, and the same must be exported without payment of any import duty. Without payment of import duty, all sorts of import duty have been made exempt. Even IGST and GST compensation cess has been made exempt. Here value addition must be achieved is what? 15% value addition must be achieved. But this advance authorization basically is non-transferable. Advance authorization, the same is say non-transferable. Same is subject to actual user condition. And advance authorization and the materials which are imported under the cover of advance authorization, they are what? Non-transferable. Then we are having advance authorization for annual requirement in case a person has export performance in last 2 years, he can we given advance authorization for annual requirement, that is what is the limit? It is 300% of the FOB value of exports or FOR value of deemed exports or rupees 1 crore, whichever say higher. Then we are having say one duty free import authorization, DFIA. Basically it is a post export facility which is allowed to import inputs which are used in manufacture of the export products. Used in manufacture of export products. Inputs can be exported, say imported without payment of basic custom duty. Here basic custom duty is say exempt. Basic custom duty is exempt. And the minimum value addition which is required to be achieved is say 20%. Minimum value addition which is required to be achieved is say 20%. And fulfillment of export obligation is say within a period of 12 months. Fulfillment of export obligation is say within a period of say 12 months. Now separate DFIA, they are issued for each scion, where each scion and each port, and DFIA is transferable. The DFIA is basically transferable. After completion of export proceeds, exports and realization of export proceeds, transferable DFIA may be issued within a period of 12 months from the date of export, or say 6 months of the realization of the export proceeds, say whichever is later. This is about DFIA. You can know the differences between AA and DFIA. Then we are having say export promotion capital goods scheme. Here capital goods are allowed. Capital goods are allowed to be imported. Here capital goods are allowed to be imported without payment of custom duty, and same is subject to fulfillment of export obligation. What is 6 times duty saved? And same is to be fulfilled during 6 years. So basically export promotion capital goods scheme, it is a facility to import or say procure indigenously goods, basically capital goods at 0% custom duty, subject to fulfillment of say export obligation. Okay, and the license term is 18 months. 18 months from the, within a period of 18 months from the date of issue of authorization, we can import the same. Now, what are imports under EPCG scheme? Basically, what is the export obligation? 6 times of duty saved. 6 times of duty saved. If they are indigenous sourcing of capital goods, then export obligation is 25% lesser. It is what 4.5 times of the notional custom duty saved. It is 4.5 times of the notional custom duty saved. Then for green technology products, export obligation is what? Whatever duty saved is into 4.5 times. And for units which are located where? In Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim and Tripura, that is northeastern states, and Jammu and Kashmir, export obligation is what? 25% of the original export obligation, that is whatever duty has been saved into say 1.5 times. So if 20 lakh duty has been saved, in normal circumstances, export obligation is to be fulfilled, that is 6 times of the duty saved, that is 1 crore and 20 lakhs a year. And the same is to be fulfilled within a period of 6 years. Then we are having say special schemes have been made for say export oriented units, electronic hardware technology park, software technology park and biotechnology park. So minimum investment criteria is here 1 crore and they must achieve positive NFE. They must achieve positive NFE within say block of say 5 years. So under this basic scheme, units under EOU, ESTP, STP, BTP scheme, they are required to export their entire production of goods and service except permissible sales in DTA, and they can import input and capital goods. They can import input and capital goods without payment of say custom duty. Now basically procurement mode is import. Procure the same from bonded warehouses in domestic tariff area or procure from international exhibition held in India. The same is without payment of basic custom duty, additional custom duty, IGST and GST cess. Now here exemption has been issued from IGST and GST cess. Now these timelines have been say omitted now, the same will be exempt. IGST and GST cess has also been made exempt. Procurement from DTA, if they want to procure the same from DTA, then GST is payable. Now here for the supplier, it is regarded as deemed export. Supplier is, it is regarded as basically deemed export. Those who are supplying to these EOU units. So here either the recipient can claim ITC, this EOU can claim ITC or refund, or it can be disclaimed, then supplier can claim the refund. So here the refund of GST taxes for supply from DTA unit to EOU would be available to the supplier as provided under GST rules, subject to the condition that conditions and documentation specified in the GST rules. And excise duty is not payable. EOUs can procure excisable materials from DTA without payment of the excise duty. Fundamentally, these are the incentives which are allowed to these. Then we are having one deemed exports. Basically, deemed exports are what? Supply, as we have seen, supply of goods to advance authorization holders, advance authorization for annual requirement, DFIA, supply of goods to say EOU, ESTP, BTP, okay. Then supply of capital goods against EPCG holders. Supply of capital goods against say EPCG holders. Then if there are main contractors or subcontractors, they can supply the goods to projects or turnkey projects financed by the multilateral or bilateral agencies or funds notified by Department of Economic Affairs under international competitive bidding. Supply of goods to any project where import is permitted at zero duty. Supply of goods to mega power project. Supply of goods to UN or international organization for their official use, or supply to projects financed by them, or supply of goods to nuclear projects through say competitive bidding. Now basically, what are the benefits of deemed exports? Benefit of deemed exports is what? Advance authorization, or say they will be granted advance authorization or advance authorization for annual requirement or DFIA, deemed export drawbacks, and refund of terminal excise duty. So fundamentally, these are what the benefits which are granted for deemed exports. So this was all about our foreign trade policy. You discussed the export promotion scheme in depth. Okay, export promotion schemes are very important. Practical questions can be asked on the same.